Yesterday, gold gave 5 winning setups across 5 consecutive hours, just in one session, just the London session. And yeah, every single one of them, as you can see, was a winner. And in this video, I'll walk through each one and show you exactly how my Virgin Week Theory 5.0 model identified them, step by step, same process, over the 5 trades. Real quick before I get into it, I'm not going to go over the full model because I just did a 30-minute video breaking that down. But a 30-second summary is we're just waiting for Virgin Wicks to get closed through, which then creates our bullish point of interest. You then drop down to the 1-minute time frame. You want to see price trade into that point of interest, along with taking out some form of liquidity. And then we take in IFVG to the upside. And of course, making sure we're on the right side of the current dealing range. But again, you can see the free PDF for more details. But let's get into the trades. We'll start with this one here. Alright. So here's the multi-time frame chart, which I've been liking a lot lately. So we'll start with the 1 hour here in our top left. So as you can see, we have a really strong bearish post-sweep POI here. So we had a sweep there and then a strong Chad candle down, creating a point of interest there and there. So there's our POI marked off, and then on our 15-minute chart, I'm going to mark out our range. And so for me, I see a pretty clear impulsive leg down from here to here. Everything else besides that kind of just choppy. So step 1, we've got our point of interest. Step 2, we've got our range marked off. And as you can see, we are right around that 0.5 level. And then on our 1-minute chart, we just want to see an inverse fair value gap. And as you can see, there is a nice thick, super juicy inverse fair value gap right here. So what I've done here is there's actually 2 consecutive IFVGs, but I've just combined them. If you ever see consecutive ones like this, I'd rather just combine them and treat them as one. So yeah, really nice thick one there. And then, yeah, upon, so your entry would actually be here. I marked that off wrong. Stop loss there, 1.5. And let's have a look. Okay, so this one you would have actually gotten stopped out. No, you wouldn't have got stopped out break even. This actually goes to take profit. Okay, let's just say you get 1 hour out of this, because you do end up getting another setup right here. So let's go over this one. I'll just take it back to here before the setup. So on our 1 hour chart, here is the point of interest we are using. And then our range stays the same. Oh yeah, this was one of the ones that I did not like. So I didn't take this one because I didn't like how we were already in the discount. As you can see on our 15-minute chart here on the bottom left, we are in the bottom half of the range, indicating to me that shorts are lower probability. I would rather take it off the 0.5 or higher up, ideally. So I did not take this one, but regardless, ends up being a winner anyways. And you could also say that we have a really strong Asia low / hourly swing low down here, which is a very strong drawn liquidity. So you could still take a short here all the way down there. But personally, I would rather stick to my premium discount framework, and I would not take this one. But still ends up being a winner. And then we have another one here around 5 AM. Let's go there. All right, let's start again. So I believe this one was a 2 hour point of interest. So we have this strong bearish shade candle closing through this virgin wick, creating your bearish POI. And then on our 5-minute chart, let's mark off our range. And it'll look something like this. So here we get a nice strong move, delivering from these FVGs here. So there is our range, the midpoint there. So price comes up, engages a point of interest and the 0.5 level, followed by an IFVG right there. And then of course targeting 1.5R or whatever you want to target. And bang, very nice. All right, on to the other two. Yeah, pretty crazy that these just, all 5 of these just happened consecutively. Pretty insane. But let's go here. All right. So what are we working with here? We have this POI here. And then looks like our range has changed. So my range now looks something like this. Oh, sorry, this should be bearish. All right, and then on the 1 minute, we're just going to look for an IFEG since we have everything else. What if I marked off? Oh, no, that's right. The IFEG is here. And so that gets confirmed on this candle here. Yeah. So I actually entered in this one. And once we got to 1R, I took half of my profits and I left the rest as a runner and put the stop to break even. So I took half profits here at 1R and then got stopped out right there in the at break even. And then there was another setup immediately after that. But after that break even, I needed a break and I just didn't want to chase any more setups. But if you stayed on, there was another setup, pretty much identical setup. We push back into premium, into that point of interest. And then we get a nice thick inverse fair value gap right there. Bang. So you can enter in right there. Stop loss just up there, targeting 1.5. Let's have a look. Yeah, super nice. But yeah, I didn't catch this one. But yeah, that was it. So 5 pretty nice setups, depending on your take profit stop loss. Could have been 5 winners, depending on your framework, what confluences you use. But yeah, nice and simple, clear process, clear setups. All right, so as I was watching back the video, and I was just about to upload it, I realized I did not go over the 3rd step in my model process, which is looking at medium time frame liquidity, aka 5-minute or 15-minute FVGs or swing highs and swing lows. So I'm just going to quickly go over all of those setups and show you the form of liquidity that was taken. So we'll start here at the last one. So right around entry time, let me zoom out. Here is my 5-minute chart. As you can see here, we swept, took out this high, took out this high, and took out this high. So that's a nice sweep for me. That's all I want to see. And then on to the next one. Let's go right around that entry. What do we have? Massive FVGs right here that we tapped into. So there's your liquidity, medium time frame liquidity taken. And then let's look at this one. So right around this entry, let's see what we're working with. Beautiful. So we swept this 5-minute high and this 5-minute high. Exactly what we want to see. And then this one. Yeah, another bunch of highs taken out. All these relatively equal highs, swing highs, taken out by this one candle. Perfect. Even some FEGs here as well. Beautiful. And this one. Okay, this one's actually kind of choppy. Let's see. Any form of liquidity here. Yeah, so this one's not super strong, but you could say there is a 5-minute FEG right here that does get tapped into. Right there. Right before giving our entry, as you can see. So definitely valid. So yeah, just wanted to add this little clip in before I finish putting up this video, because I realized I missed this part. If you want the full written breakdown of this setup, I have it linked below as always, or you can check out the last video where I went through the whole thing. But yeah, that's it for today. Hope you like that one. See you next time.